Hey, it's Buzz's Retirement Garage. It's a Sunday. We moved the clocks forward. And it's cold as heck in Cleveland, Ohio. We got a nice little storm that came through last night and this morning, putting about 2 or 3 inches of snow down, but of course it's not going to stick. So I wanted to throw my Ohio State Buckeye hat on for all my Michigan commenters. You know who you are. Yeah, I know we lost. Yeah, I know. But I'm a Browns fan too, so believe me, I know pain and misery. Anyway, I wanted to talk about on some of my videos. I talk about budgets, and I reveal my budget and my income, which is Social Security, on a monthly basis. I started in December, did one January, did one February, and of course I'll do one in March. And I've gotten a lot of good comments about how I can reduce my expenditures. And I call it the best practices of spending. So the way to get to a best practice is to solicit comments from everyone else who is retired or about to retire and figure out what's the best way to handle, cable. How do you handle not your fixed costs, because there's not much you can do. Well, there is, but they're pretty much fixed. Your gas, your water, your heat, electric. There's not much you can really do with that. But there are some things that you can reduce. Now, one of the topics that I wanted to touch on today was the life insurance. I put down on my budget that I'm paying $209 a month for life insurance. And I told people in the February, I think December, January, and February videos that I'm paying $209. $160 of it is for my universal health insurance policy through State Farm for my wife. It's a $200,000 plan, universal life, that I've had since probably the late 80s when we were younger. So a lot of people, or a lot of commenters, have come back with, you don't need insurance, number one, because your house is already paid off. What do you need insurance for? What do you need life insurance for? I'm not talking about house insurance, I'm talking about life insurance. What do you need life insurance for? And then number two, you're paying so much for universal, you should be just getting a term life insurance policy. So again, I listened to all the comments, and I've mentioned a couple times that I'm going to sit with sorry about the plane, we're near Cleveland Hopkins Airport. I've mentioned a couple times on my videos that I'm going to meet with my agent. Now, he's a new guy. The older guy that we had, he either retired, and I think he passed away. I have not met the new guy yet, so this may be a time to get in with him and break everything down, and I'm going to do that. Hopefully I'll get that done in the next week or two. I did reach out to him with an email, and he responded back that he does have some time to see me, so we're starting to set that up. So I got in the mail from the AARP, okay? They send out information. They send out the consumer cellular telephones, the cell phones. They're in bed with, or I should say they partner with different companies to try to reduce costs for seniors. And one of the reasons I'm doing this video is because I got this through the mail, and it talked about term insurance, which again, some of my commenters are talking about you must have term insurance, get rid of anything else, okay? So at my age group, I'm 64 right now, and it breaks it down every 5 years or so, 4 years. At 64, for $150,000, this is through AARP and New York Life, they want $233 a month. Now remember, this is for a non-smoker, which I am. Remember, I'm paying $160 a month for $200,000 through this universal life. They want $233. In January, when I turn 65, it jumps up to $323 a month for only $150,000. So to the people, and yeah, this is only one quote. This is just one one quote that was thrown out there by AARP, unsolicited. I have not talked to anybody else about it, but on the face of this, I don't think a term insurance policy is going to work for me unless I can find a better rate. So I did this little thing here, and I'm still going to talk about missingmoney.com. I think you should try that out and see if you have an opportunity to find some funds. It's through all 50 states, so you might want to check out missingmoney.com. But as you can see here, the State Farm Universal Life is $160 a month. The AARP New York Life term insurance is $233 a month for $150,000, and then in January for me, when I turn 65, it's going to go up to $323. So I'm not sure that's a good deal for me. Now, I've paid into this Universal Life, and I'm not going to get into specifics about term, Universal Life, and whole life. I'll just tell you that out of my $209 that I pay per month, $160 goes to mine. My wife's is about $40, and my daughter's is like $9. So I have a whole life $15,000 policy for my daughter, and it's got a cash value of $1,500 or $1,600. I don't know if I'll keep that one because our cemetery plots and everything are paid for right now. My wife's is $100,000 Universal Life, and she's only paying $40 a month. Could I cancel that? Yes, and save $40 a month? Sure, and I may do that. I'm not sure yet. When I meet with the agent, I'll find out. And of course, mine at $160,000, or $160 a month with $200,000 benefit. So why do I want to keep that? People say you paid your house off, you need to get rid of it. My wife's Social Security spousal benefit is $1,257 as it stands right now a month. So if I pass away, she's going to lose the spousal benefit and take my benefit of $2,520. So she's going to lose her $1,257, and if you take that times 12 months, it's what, about $15,000 a year? So she's going to lose $15,000 a year. Now, one commenter said, well, you're not going to eat, you're not going to have things, you know, done for you. You don't need clothes, you don't need this, you don't need that. So she'll have less expenses, and that's true. But to what extent do I want to take that gamble that she's not going to have some extra cash? So that $200,000 will cover her based on dollars today. We're not going to get real specific, but round numbers. You know, Medicare is going to go up. The Social Security is going to go up. Let's just call it a wash for the next 10 years, let's say. Well, that money's going to cover her for 13 years of the lost income from that spousal benefit that she's going to lose. Can she make it on just my $2,520 per month? Yeah, she probably could. She'll have to scrape and scrounge and whatever. But, and use our savings and use what we have in stocks. But wouldn't it be, as a husband, and again, this is my personal preference, but as a husband, should I make sure that that $200,000 can help her? Because, you know, guys usually die first, right? And you know the old joke. Why do guys die first? Why do married guys die first? Because they want to. Sorry. But yeah, so why not keep her with an extra 200 grand so she doesn't have to, if we're getting by on what we're doing right now without touching our savings, why not keep it that way? Why not give her another 10, 11, 12, 13 years of not having to worry about going into the savings? And then heck, if she gets into the, you know, 75, 80, 85 years old, she can get into the savings, and I want to cover her. So is $160 a month a lot? Yeah. But is it worth it for my peace of mind? Remember, I had cancer 10 years ago. You know, I figure I got 10 years left. No, I don't have any reoccurrence or anything like that, but once you've been radiated and you've had chemo, you know, your body's gone through a lot of stuff. And so should I, you know, Do I think I'm going to live another 20, 30 years? No, I don't. So I think maybe 10 more years. That's my just guess, okay, based on my history and my family's history. So that gets me to 75 years old. And, you know, I look at the obituaries, and I see that there's a lot of people dying and they're passing away in their late 60s, mid 70s. So that's probably, to me, about average, you know, 75 years old. Okay. So if I have to pay another, you know, if I have to pay some more money per month to have that feeling inside of me that it's going to help her, then that's my choice. And that's what I've decided to do. You know, talking about insurance agencies, someone also said something about State Farm. You know, they're doing this, they're doing that. I'm sure all insurance agencies, you know, they're out to make money. So, but let me tell you a story about State Farm. And this is kind of a strange one. When my daughter got cancer in 2020, shortly after she got cancer, we got an unsolicited email or letter, I should say, from State Farm. Now, they didn't know she had cancer. And it said on the letter that this is a one-time offer. She had $15,000 life insurance, like we have on our other daughter. And they sent us a letter, and they said, for a limited time, you can add another $10,000 life insurance at no cost. Just fill out the form and send it in. Never before, and I've been dealing with State Farm for 34 years, never before did I get anything like that, and afterwards I've never received anything like that. You can look at that any way you want, but yeah, that was when she passed in August of 2020. State Farm paid the full amount. So, you know, we can say whatever we want, but on a personal level, I think I'll stay with them. Anyway, this is Buzz's Retirement Garage, just explaining about insurance. If you have comments, questions, please let me know. I'm not an expert. I'm certainly not an expert. I'm the least expert sitting out here. Maybe the birds are smarter than I am. But leave a comment. If you're an insurance agent, you know, maybe help us out here and throw some pros and cons about different insurances and rates. Whether we should keep it, whether we shouldn't. See how things go. So we'll talk to you again next week when it gets warmer. It's supposed to be 60s next week. Buzz's Retirement Garage. See you later.